2020. What a week. A lot of drama going on here. A lot of emotions being tested. Got to be careful. Last week we went into one of the largest sell-offs in history. Closed around the 2190 level. I was the most concerned there, not for myself, but for other emotions. Because what happens here is this. When you go into a weekend after one of the biggest dips and it being an ugly close, it gives people the ability to check their accounts and have 2 to 3 days to think about it. The worst possible thing that could have happened. Now we're kind of in a reverse situation this week. Okay? So now we are in a situation where the market has rallied 15 to 20%. And now on a Friday, we're in a kind of pickle here. Could this go a little bit higher? Do I want to add more now because I have a fear that I might miss out on the next rally? Because again, most people do want to sell everything at that bottom. Trust me, I was hearing it on last week during that close. And actually we were doing well, but watching the news is just going to kill people. I'm just telling you, it's just so negative right now. And don't get me wrong, these are concerning times, but the point being, from a behavioral standpoint, we are the complete opposite spectrum. Last week not everybody, but you get my gist there. Most people wanted to sell at the bottom after a horrible sell-off. Now we're in a situation where the week has ended and we had, 15 to 20% upside, and people feel like they're missing out here. So we're in a little bit of a pickle here, and people are going to be probably calling me again to say, I want to add here. And I can tell you this, I'm not really too interested in adding here. I was very interested in adding when I did at 2190. So watch your emotions here. I'll leave it at that. We're going to switch gears to the charts. All right, so here we go. A midterm perspective. First off, what we are seeing here is very normal in a bear market. A bear market meaning this coronavirus, if you don't think is real by now, you have serious issues. Not trying to be mean. This is legit. This is legitimate concerns. People need to take this seriously. I'm very concerned with the way we are handling this as a nation, but don't worry, that's not necessarily a direct correlation to the market. But I am very concerned the way most states are handling this, which is going to unfortunately prolong the whole issue. Case count will, as projected, likely surpass the case count in China and Italy if we continue to follow this path. That's based on a lot of factual information. I am very concerned with that. I don't think the world is in, 6 to 12 months from now, these numbers will be forgotten and everybody will forget about it. But this is one for the books. I mean, this is bearish price action. And when you get a relief rally, which historically a 15 to 20% relief rally does happen during these times. And I'm going to show that to you. So I love the relief rally. For clients currently have 20% invested, and you're like, wow, I'm surprised you don't have a little more invested. Well, we did have a lot more invested, and on the way up have been trimming, which is exactly where I want to be. Friday, I came into the day with a risk reward saying, what is my upside here? Basically, I had the opportunity to get in at 25.25 actually. This morning, 25.25, right around here. We did test at the very, very end, and I'll show you short term. At the very, very end, we did test higher. It got to definitely over the 2600 toward the close, and there was just no confidence there. So we're in a pickle here. I do think short term, again, we could still test higher, 2600, 2630. in these levels above. I would probably, to be honest with you, um, unless a vaccine comes out, I would be very interested in shorting here. I'm just being honest with you. I'm not trying to scare you. My job is to make people money in both sides of the spectrum. Again, long term, I'm very bullish. These numbers will be forgotten, but short term, after a 20% increase, this is not a time to buy, in my opinion. There's definitely the possibility for an upside, and I'm seeing some good things, and I want to be honest about that. There's some bullish engulfing numbers that I see. There are theories out there when you have 3 up days back to back with certain bullish or resiliency after that you do get follow through. Some people are calling a bottom here. I got to be honest with you. I do not think that this is a bottom, which is why I'm positioned the way I'm positioned. I'm putting people's money and my own money where my mouth is. I think there needs to be a serious consideration in how this is being resolved. And when they're saying we're going to be back full by Easter, I think there needs to be a better course of action, to be honest with you. But that does not impact. I'm watching price action. That keeps me out of the political nonsense that's going on right now. Everybody battling it out. But in reality, I have to ask myself, do I think 2330, this level, or 2800 is going to happen first? I personally think probably 2300. And so I need to price and position my clients that way. I mean, this was a fantastic week. Understand this for clients. Again, this is all informational purposes. If somebody else is watching this is mainly directed toward my clients, okay? It's informational purposes only. I need to make sure I get that disclosure out. But the point being, I have 20% invested, but it's acting like 60% is invested. So if it goes down, I still have, 80% to invest, but I think legitimately there could be a little more upside. Things such as bullish engulfing, the fact that rebalancing occurs at the end of the quarter, that could be a nice little shakeout where people get out of treasuries and say, okay, I need to shift more toward equities, because treasuries have actually done okay during this period, and they might say, okay, we need to shift more toward equities, because the big boys, many of them, in pensions shift every quarter. It's end of quarter, end of month. So there could be a little more upside, and that's why I have a little bit invested in case it does. But do I foresee downside first? Yes. And if that changes, I'm going to shift quickly in the market. So understand your plan. Our plan is to slowly and add on the way down, which I do think is going to happen. I mean, we're not even close to where case count will be. Again, the market is forward pricing, though. I am concerned after this 20% increase, which I was happy to be a part of, and do very, very well. We had 50%, which acted like 110% invested. So we did very well, but I needed to trim on the way up. So it was a heck of a week for us. We're doing okay. I feel like we are allocated the way we should be at this point. So I'm just being real with you. I want to be candid. You should not be worried about that. My clients should hope the market goes down. That doesn't mean you're mean to other people that have a different plan. I want to make that very clear. Everybody has a different plan. I would rather be in the position that we are in. And I think most would agree with me to say we rode it up strong. And now time to back off, because I don't see a ton more upside short term. Long term, absolutely. I'm bullish long term, but the next few days could go up a little bit more. Happy to be a part of that. I'll trim more into it. And then on the way down, we'll be adding hard. And our retest, I'm not sure we're going to get all the way to the 2190 level. We'll see and play that by ear. But on the way down, I just think we're going to have better pricing. So there's the midterm view. Let's go to the short-term view. See if this updated. Yes, it did. Yes, we're good. So again, I'm showing the same levels that I did on the other page. What a week. I mean, again, emotionally, last week we were talking about that huge dip that we saw. Boom, everybody was panicking, wanted to sell. That was scary. Okay. Then we started to rally the next few days, Tuesday, Wednesday, Thursday. That's not a small move, going from 198 to the peak being 26.37. I think we might retest that. We tried to at the end of the day, as you see here. I was contemplating getting at the 20, like I said, the 25.25 level. But man, this happened so fast. And look at the quick little candle there. It happened so fast there. I think it was just a recipe for disaster that I did not want to be a part of. I stuck to my guns, and so I'm glad I did, but it is nuts out there. You have no idea how fast this is moving. Interesting times for sure. So we're in good position either way. Have some if it goes a little higher, but again, I think the move is more medium term and a little bit lower before we go higher. So that's the way I'm positioned. Again, a key level more long-term. Here's a long-term perspective over a several year period. Here's the level that wanted originally retested was the 23.46. That was tested. We fell apart. Could we hit this level again? Maybe. I would not be surprised if we do. And I will be adding in hard and on the way down below there. So I want to keep you expected. This could change in a flash. And so I have to have some invested at all times. If a vaccine comes out, right now stimulus is keeping people in, rebalance is keeping people in. Some leaders are actually doing okay price-wise. Price action has not been horrible. So we have to have some invested here, but I do not want to have more than I have right now. Happy to miss out on a little upside to protect the downside. That's the way I'm viewing this, and I have to view it at this point. So next chart, gold. Again, everybody assumes that these areas are going to do well during a down period, but usually the initial sell-off, everything kind of gets hit together. Now, it did have a rebound, as you can see. It got killed. I mean, 160 to like 138, that's a big move. Everybody assumes these areas are going to be a safe haven, but on a sell-off in the last few big sell-offs like 2018, gold really didn't do that well. Bonds really didn't do that well. Sure, they might hang in there a little better than others, but don't just assume it's a safe haven because it's not. Now, this could be a very interesting play. It has gotten above and a decent RSI. There could be upside in gold, so we'll be watching that. But when things stabilize, you want to see these areas do okay. And so we're starting to see signs of that, and I just want to be real about that to say we're seeing stabilization, but it doesn't mean we are at a true bottom. I think we might have hit a bottom, but we probably will test lower. So TLT, here's an interesting one. Here's where I was basically saying not too long ago, be really careful here. Be really careful here. That is a massive sell-off, held the 200-day moving average, and rebounded. So don't assume it always is going to do well, but this is an area of interest again, holding relative strength pretty well during this time. Kind of interesting. Another area that's been interesting, and again, not always a direct correlation, but I want to keep an eye on this because people will be watching this and many algorithms will as well, is crude oil. That is very low. That is just the month. It is testing the lows as we speak. That is not bullish. Now, there are many things throughout, the world that can make this go lower and the indexes go higher. I want to be real about that, but this is short term, not necessarily a good thing to see this stabilizing at 21. When it got over 22 and got a little bit higher, the market did well. But right now it's not pretty. So I want to be real about that. But here's the final story, and I got to be real about this. Guys, this price action is normal. You get the relief bounce. You see emotional retail investors try to get in. The big boys get out, sweep the floor out from under them. It's the same people that wanted to sell at 21.90 that are saying buy right now. There, again, could very well be a little more upside short term, but I think you got to question the risk reward here. Again, if there is a vaccine, we shift immediately. However, I think we're a little bit out from that time. So the next few weeks will be interesting. I expect to be able to add lower, but I'm very open mind to higher pricing as we very well could test 2,700 at that point based on what I'm seeing right now. And that's why I have some in the market. So just want to keep you posted. I hope that helps. We're going to include some kind of cliff note version of our thoughts. But again, the summary is this. We are going to be fine long term, but after a 20% increase, do you think I'm very interested in jumping on this when I don't really think we're even close to coming up with a resolution? And case count will increase. There are a few things that make me a little bullish short term, but I like the way I'm positioned right now. So again, the point being here, and kudos to Ryan, this is good stuff. And again, none of us are bearish. This is just the reality. Just remember, in 73, 74 bear, we saw a 20% bounce. Several times we saw these bounces and still ultimately fell a lot. I don't think we go here. I'm just being honest with you. But he's just proving a point. Like, the average rally during a huge sell-off is 15 to 20%. Then we retest. We might not retest all the way lower. We might just test a little bit lower at key levels, which I included. So I hope this is helpful. Let us know if you have questions. But the summary is this. Support one another. Take your politics, throw them out the window, watch price action. If you're watching the news, you are going to think the world is going to end. Period. Even if you disagree with what is going on from our leaders, please pray for them, because this is not an easy situation for anyone. I disagree with how this is being handled, but you have to keep your emotions in check, because the market is forward pricing here. So in time, there will be massive buying opportunities, but I think we go a little lower first. Hope that helps, guys. Love you all. Hang in there. It's going to be very interesting on the way down. It's a situation where the next couple months, you might not like me short term, but in the next few months, the next months after that, we're going to get in at very good pricing. So hang in there, you guys. Hang in there. See ya. Bye.